boy, guess who's back from the dead? Welcome back to Strongman Personal Finance, everybody. My name is Christopher Belly. I'm a certified CPA accountant. I'm a fake boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And I've decided to come back on YouTube and just do a stream with you guys because I missed you, okay? Now, I don't know what kind of illness I had, but I've basically been extremely tired. So literally Friday afternoon, I got home because I get off at noon on Fridays. You know, we do public accounting. So on the during tax season, we work like 10 hours a day, 6 days a week. And then on the weekends, well, on the weekend, we work during tax season. But when tax season's over with during the summer, we get half day Fridays. So I got home Friday. And I was freaking exhausted. And at a certain point, I was like, there's no way I can be this freaking tired. Like, something has got to be wrong with me. This can't be normal. And all of my kids have been sick. My wife's been sick. And I was like, you know what? I think I might actually be sick. So lo and behold, I literally laid on the couch all freaking weekend. I was kind of like delirious. I was out of it. And I literally had no energy. And I'm finally starting to feel like decent enough to even have the energy to make a video. I even went to work today. Now, we're going to catch up on the market after I throw in a fat chew, because why not? I heard some clown stocks are going back up, you know, something like that. I see all these people posting that Tesla's going to go to the moon. What changed about Tesla? Baba getting freaking wrecked? There's all sorts of nonsense going on. So the first thing we're going to look at once I finish putting my chew in is, what is it? Bed Bath & Beyond. So apparently all the clown stocks, AMC, this and that, they're all going up again, which tells me that this clown market is not dead. Now, does it affect me in the long run? Absolutely freaking not. I don't base my investing philosophy off clown stocks, but I can tell you, if you're like a market timer, you know, you like to time the market because you're a genius, I'd be concerned. Because look at this. Okay, Bed Bath & Beyond. This company is on the verge of bankruptcy. Like, it is so easy to see. It's undeniable. Like, they have so little cash on the balance sheet and they're burning it so quickly. This company is a disaster. And personally, I don't even like shopping at this store. But of course, all the clowns are jumping in. Let's see if Wall Street Bets, or no, Reddit. Let's see if Wall Street Bets is talking about it. Wall Street Bets. Let's see if Wall Street Bets is talking about it. 87K into Bed Bath & Beyond. I'm stupid. Yeah, you are stupid. After 7 painful years, I finally made it to 69. Buying Bed Bath & Beyond at $450 after bad earnings. YOLO your entire student loan at 17 due to FOMO. It's so true. Like, let's see how much it's been up the last couple of days. Look at this. Oh my God. Look at this disaster of a company. So it's still down 42% on the year. But, you know, recently it looks like around, you know, late July, it started to have this clown rally. And there's no fundamental reason why, because their earnings were just god awful. I mean, I wonder if their stock analysis is updated yet. Like, this company is, I'm not even joking, it's literally on the verge of death. It went up because short squeeze. Actually, do they have short interest on here? What's a short interest on this? Let's see. BBBY, short interest. Short interest, 2.8 million shares. 41% short. Oh, I wonder why. I mean, you can go look at the balance sheet. Look at the most recent quarterly filing. They had $107 million of cash, right? And this was a couple months ago. And they're burning roughly $383 million of cash every 3 months. So they're on the verge of bankruptcy, or they're going to have to dilute, or they're going to have to go into debt. And I don't know who's going to lend this clown company debt. It's a freaking disaster. It's so bad. They have a negative book value per share. That's right, ladies and gentlemen. They have negative stockholders' equity. That means the debts of the company exceed the assets of the company. The stock owners, the common shareholders, have no claim to any of the assets. Now, the only thing that would make this make even a little bit more sense is if the fair value of some of these assets were greater than the book value. Because, for example, when you're looking at property, plant, and equipment, that's like the buildings and the factories, if they have them, and tractors and whatever, property, plant, and equipment. This stuff has a book value, which is the accounting value. It's you buy it and you depreciate it. Fair value is what it's actually worth. For example, I bought my house roughly $250,000. If I was depreciating my house, which I guess I am because I have a home office, I use the price that I paid for the house. I don't adjust the price of my house on my balance sheet, but my house is worth like 50 grand more on the market. That's the fair value. So while you may have a negative book value here, maybe the fair value of these assets, maybe there's something going on there. But at the end of the day, this is a freaking joke of a company. And of course, all these morons, BBBY, I can predict exactly what's going to happen. It's going to stay elevated for a couple more weeks, maybe months, and then it's going to freaking crash. Now, should you play this? Should you YOLO options like buy puts? I would say no. And I actually learned my lesson with AMC. I bought a put on AMC. I was like, there's no way these freaking clowns can keep AMC so high. I was like, no freaking way. And of course, what did they do? They freaking kept that stock a lot higher than I ever imagined it could be. So, I mean, if you want to gamble around and have fun, go ahead. But I'm staying the heck away from this clown stock because you can lose your butt. Look how expensive the options get. Woo! Well, strike price 45, 44. This is such a freaking joke. But yeah, if Wall Street bets like it, it's a freaking clown stock. I even made a dedicated video about this where I was like, oh, look at these clowns. I didn't even understand how to read a balance sheet. It's freaking hilarious. How is this stuff not dead? Honestly, how is this stuff not dead yet? I don't freaking get it. Let's see what AMC is doing. Or the Ape Father's about to break even. So AMC is up 49%. How much is Tesla? Another clown stock. This is Wall Street's clown stock. Up 24%. Let's look at, I wonder how much NEO is up. In the last 3 months, well, the last month it's flat. The last 3 months it's up 46%. Let's see, what other clown stocks are there? GME, of course. The king of clown stocks. Up 8% in the last month, 61% in the last 3 months. I wonder how much, what are some of Jeremy's clown stocks? SmileDirectClub. Oh my God, look at that. Woo! So SmileDirect, my heck, is up 95%. Did they just have earnings? Let's see. SmileDirectClub earnings. I'm sure these are going to be freaking glorious. God, this freaking fly's pissing me off. Where are the I want to see this crap. I want to see the financial statements. Let's see. All right, let's look at their balance sheet. So they've burned, was this in that? Okay, that's in millions. So they've burned roughly what? $60 million of cash in 6 months. They've collected some receivables. Let's see. So even after collecting receivables, they still burned cash. Inventories only went up a little bit, so they didn't spend that much cash. Let's see. Prepaids, they spent a little bit of cash there. Non-current accounts receivable, interesting. PP&E, they actually sold property, plant, and equipment, or they just depreciated it. Let's see. Leases are flat. Other assets went up a little bit. Let's see their debts. Accounts payable went up. Accrued liabilities went down. Deferred revenue went down, so they earned some revenue. Current portion of long-term debt, other current liabilities. Long-term. I'm trying to find see if there's any like massive red flags here. Okay. Let's see if they issued any stock. Well, their shares outstanding actually went down. Look at that. Did they buy back shares? Wow. But we can see they also have negative equity. Oh, so this amazing company has an accumulated deficit. They've lost $338 million since inception. Let's see, year-over-year revenue. Oh my God, look at that destruction. Their revenue's going, this is supposed to be a growth stock. Their revenue's down. Let's see their gross profit margin. %78 versus... okay, their gross margin's flat. That's good at least. Let's see, marketing expenses are down. Spending is down everywhere. Loss from operations, $54 million. Let's see what that loss is. 54, 958 divided by 11. 47% loss from operations. So it looks like a big part of their expenses are, well, marketing and selling and general and admin. I don't know what's going on here, but whatever they're spending right here, general and admin, I don't know if they're paying the CEO a lot of money or they're just trying to market like crazy. They're losing a lot of freaking money. And you can see over the 6 months, they lost, just in 6 months, they lost $126 million. Let's see. Total net loss, $65 million in 3 months and $138 million in 6 months. Okay, let's go down. Let's look at their statement of cash flows. All right, what are their add backs? Depreciation and amortization, stock-based compensation, and a little bit of accounts receivable. So they've burned in 6 months $79 million of cash from their operations. And they've burned $32 million from property, plant, and equipment. So $100 million gone in 6 months. And let's see, they only got... Okay, they took on some long-term debt, just a little bit, and that's basically how they finance their operations. So you can see, like, they took on more debt than they spent in property, plant, and equipment. And you can see here, too, for the prior 6 months last year, they took on a bunch of debt, and they didn't spend it on investing. Maybe they bought, well, no, they didn't even buy... What do they do? They're just using long-term debt to finance their operations. That's what it looks like. And, of course, they have negative free cash. I mean, what? Ew. Oh. Do you guys even see the... Okay, his teeth are closer together, but they're still freaking... I mean, I dip, and my teeth are nicer than this. Holy freaking crap. What, does your freaking dog get... teeth products too? Sorry, doggo. Oh, God. Let me check some comments. Oh, this is too fun. Sicky my sticky. Yeah. I didn't do videos for like 2 or 3 days, man. My ad revenue plummeted to nothing. GEO stock announced. Everybody talking Burry, but not the actual stock that he holds. I have like $500 in GEO. You know what my thesis, my little clown thesis on GEO was? So GEO, they do private prisons, right? And a big part of their problem is they're worried a lot of banks. Well, first of all, they have a lot of debt. They have a lot of debt. And a lot of banks are saying, oh, we're not going to issue you new debt when your old debt matures because you're not liberal and amazing, okay? You're a private prison, and that's just not politically correct. So people are worried that GEO is just going to go bankrupt because they have all this debt, and they're potentially talking about cutting contracts with the federal government, all that stuff. And I was like, at the end of the day, even though we like these liberals, these politicians are like, oh, you don't need private prisons, they're so evil. We freaking need them, okay? When they don't have room for like swarms of illegal immigrants, sometimes they use the private prisons, okay? But that's kind of my little thesis. But if I lose my money, it's whatever. Sean, you really think you can thrive as a hater channel? You're going to have to flip the script. Seem to be doing well so far. Let's see. Not going to lie, Wall Street Bets is effing information of meme pumping up. I mean, yeah, you can get in it, and then it's, if you screw it up, though, you get freaking wrecked. I tried the shorting thing. It didn't work. Let's see. Clown stocks are going to make me money. The majority of people are going to lose money on clown stocks, okay? I bet you hedge funds are making a freaking killing off these clowns. They probably have like all these computers tracking on Reddit what these idiots are doing, and they're just betting against them. Jeremy's tracker is stupid since he puts more money into TTCF. His overall is not comparable to VT gains, especially the one that blows up that he invested the least into. His whole tracker is freaking stupid. We can go look at it. All right. Yeah, let's go look at Jeremy's tracker. Jeremy LaFefe smells like pee-pee. I like his video titled Meet Kevin. And I actually watched it. I was like, oh, what's he got to say? And then he literally says nothing about Meet Kevin the whole time. All right. So, why can't I zoom in? I'm going to request to edit access. LeFufu, please let me edit this to show your true cost basis. You think he'll respond? Jeremy LaFefe. So VT has actually been going through a delicious rally, man. So when VT goes up 2%, sometime last week, I was a happy boy. Oh, boy. So VT, since he started this, is down. God, why can't I zoom into this? Oh, here we go. There we go. That's better. So VT's down 7%. Honestly, that's good. When VT was like in the 80s and stuff, I got my tax refund, $5,000. I threw that into there. VT wax, technically, not VT. And yeah, I was buying the dip, but generally I don't buy the dip because all the cash that I have is generally there for my savings. But there was a special occasion where I got my tax refund and I got some extra money that came in, and it just happened to be right around the time that VT was like in the low 90s or even 80s, and I was buying it like crazy. And then I'm not selling it for 30 years. So we can see Planet 13 still down 36%. And remember, he bought Planet 13 well above that. Tattooed Truckers Ballsack, horrible earnings. I mean, just god awful. What was the gross margin? Like less than 2%, down 40%. He was buying that in the 20s. Honest, he was buying that in the 10s. No revenue growth for a growth stock. Okay, that trash company that I just showed you that has negative equity, that has declining revenues, that's massively unprofitable. That's his best performing stock, according to this tracker. If you buy into this clown, you're an idiot. I'm sorry. Corsair, Avant Brands, Weed Stock, and Oatly. Did Oatly have earnings? Oatly! Oatly! Oatly, my God! Oh, they did have earnings. Let's see. Yeah, I need to do a separate video on this. Oh, I can't even freaking read this. Let me just look at the financials. EMEA, Americas, Asia, total. Yeah, I might do a dedicated video on it. I need to actually read through this. There's so much freaking crap going on here. Okay, hold on a second. Uh, let's see. So for the 6 months, they have revenue growth. What's their gross profit? A gross profit of just under 13% for the most recent 6 months. And then that's compared to the prior year of 27%. That is a massive decline in gross profit. That's not very good. R&D is up. Selling general administrative expenses are up. Operating loss. What is their operating loss? 166, 586 divided by 244, 144. 48%. Negative 48%. God. Let's look at their balance sheet. What the heck? Why are their current assets below their non-current assets? What kind of balance sheet is this? Normally you have the current assets. I was looking at this, I was like, where's their cash? Because they have their intangibles, they have their PP&E. This is a stupid balance sheet. Anyway, intangible assets are down. That could be amortization. Property, plant, and equipment is up. They bought PP&E. Right of use assets, these are leases. In a lease, you have to have a liability and a asset. Receivables. So their total non-current assets went down. However, their total assets went down. Let's see. Why is this is so stupid how this is designed. All right, just off the bat with this stupid balance sheet, I would never invest in this company. Okay, look at their cash, which is somehow backwards. The cash should be on the top. They had $295 million of cash. And in 6 months, it dropped down to $182 million. Short-term investments plummeted massively. Prepaids, the same. Receivables. Inventories are up. I don't know if that's normal, if they're having trouble selling. I mean, it's not a huge fluctuation. But the biggest change is the cash and the short-term investments. So it's almost like they sold these investments. You can see the change, 250 million down to 92 million. Usually they sell those so they generate cash so they can spend it. And then their cash balance itself also went down by over $100 million. What is wrong with it? And then the equities right after that. It's supposed to be current assets, non-current assets, current liabilities, non-current liabilities, equity. This thing is literally upside down. Oh, God. Let's see. Share capital. Looks like they didn't issue any stock. Foreign currency translation reserve. Need to look more into that. And accumulated deficit. So the net book value of this company went down by 18%. In a matter of 6 months, the book value declined by 18%. Let's look at their debts. Okay, non-current liabilities are basically the same. Leases up a little bit. Nothing crazy, but they did have an increase in debt. I mean, talk about freaking destruction. Let's see. Cash flows from operations. So in 6 months, they burned $127 million. Oh, why? What did they do? They bought PP&E. Let's see. Yeah, they sold their they sold their short-term investments. It's almost like they used those short-term investments to buy the PP&E because they couldn't do that with their operating cash flow. So basically, yeah, they didn't issue any shares. I guess that's a good thing. But, they had to finance their property, plant, and equipment with short-term investments, which I guess is not the worst thing in the world because they're not making jack off that probably. And they had no cash from operations. So they can either go into debt, liquidate some other non-current assets, or dilute the shareholders. But, this is just garbage. And you can even see, their freaking Let's see if they have disruption on here. Disrupt. See if they have innovation. No. See if they have profit on here. We delivered strong second quarter results. We burned a ton of cash, but our revenue went up. Profitability metrics improved compared to the first. Oh, you're losing less money. Yeah. We're confident in our ability to achieve much better product economies and achieve profitability. They're not even close to that. This is hot garbage. Almost, what was it? 20% book value destruction. So those are Jeremy stocks for you. Utter freaking trash. This demands a Jeremy intro.
We're gonna go down. We're only going up. Invest in that stock, and I'm out like probably 300K, and I've already written off that amount in my head. You know, maybe it works out and they don't go under. And
I don't ever slow up. No, I don't take shit. I got no love for the fakeness. If you wanna play tough and wanna hate this, I'll always show up.
I love all those intros. All right, let me catch up on more comments. Let's see. We need to check on Tesla. Wasn't the Tesla bot isn't it supposed to be introduced sometime this year? I was going to do a collaboration with Juan Valdez, and it's actually with an S, not a Z. Sorry. I just felt like crap last night. H&R Block is 100 plus this year. Can you look at it? IRS audits would be $600, reporting $600 sellers, more revenue. Maybe. That's the thing. You if you're doing taxes, you're gonna get these Form 1099-Ks. If you send money through like PayPal and stuff, you know, all these other merchants, and they classify you as a merchant, they'll send you a tax form, and that gets reported to the government. So you actually have to include that on your tax return and keep records of it. So keep that in mind, ladies and gentlemen. If you want to be a real tax dodger, you just got to pay in cash. I know people that do that. It's like, oh my God, I hate you. Because you know how much I pay in quarterly taxes, which are due in a month? $2,000 to federal, $275 to Virginia. Every 3 months, I pay my taxes. And these freaking tax dodging clowns. Oh, I don't have to pay taxes. It's not fair. VT will have terrible earnings, not a profitable company. CEO Elon will buy VT and take it private. Man, for what Elon's paying for these stocks, holy freaking crap. Oh, let's go check out Twitter. Twitter, my shitter. There's Lafufu. Ooh. Twitter stock. All right, so it's at... Did Elon cancel the deal? Look at this article right here. I'm sharing my screen. Twitter stock rises Monday, outperforms the market. Oh, it outperformed the market in one day? Wow. Oh, that's so cool. Twitter earnings. You should buy it, bro. Somebody move my fan. It's hot. Ugh. Ugh. I'm sick, guys. I need my cold air. Let's go look at... Oh, it's paranoid. I'm not sharing my screen. Hold on a minute. I got super chats. Yeah, we'll check out Enphase. And of course, the man. This is the guy I'm going to do a live stream with. I felt like crap yesterday, man, but we will definitely do a stream together. Don't you worry, buddy. I'm surviving here. Anyway, let me close some of these windows. Got all this crap off of my screen. Twitter, my shitter. Let's go look at Twitter's earnings. Twitter. Oh, blah, 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 blah. Financial statements. All right. Oh, at least this is like normal, unlike whatchamacallit. I already forgot what was that stock we just looked at? The Jeremy stock? Oatly with the freaking upside down balance sheet. It's probably some like international thing. So Twitter, their cash went up. Their short-term investments went down. I wonder if they increased their cash with short-term investments. Accounts receivables went down. They collected some cash. Prepaid expenses went down. Let's see. Property, plant, and equipment up. Leases up. Intangibles down. Goodwill up. They must have made a tiny acquisition there. They must have bought somebody. Deferred tax assets. Wow. So a deferred tax asset is basically when you get a tax deduction on your, well, not a tax, when you get a deduction on your books, because there's two types. There's your tax form, and then there's your financial statements, which is what we're looking at now. And sometimes there's differences because, like, for example, in tax, you can depreciate things faster up front than you can on the book side. But if you look at an asset overall, you're going to depreciate it the same over its life. So what happens is there's these differences between deferred tax between books and tax, and it creates deferred tax assets and deferred tax liabilities. So the way I think about deferred tax assets is I'm going to save this much in tax at some time in the future because I paid more taxes compared to what my books said I had a profit in. That's all that means. So basically they had more book deductions or less book revenue than they did on the tax side. So basically they paid a lot of taxes, but at some point in the future, because of these differences, those are going to wash out. So that's what I kind of think when I look at this. It's okay, at some point, and this is looking into the future. They're basically saying, okay, this is our tax rate, and this is how much we're going to save in tax because we didn't get these deductions now. They're going to roughly save $1 billion in taxes, which good for them. All right. That's a deferred tax asset. But this can change based on like if tax rates changes, stuff like that, that can change. Okay. So their total assets went down. Let's look at their liabilities. Current liabilities went down. Let's see. A little bit more long-term debt. Wow. They took out a lot more debt here. Look at this. They took on $1 billion of debt, senior notes, in 6 months. $1 billion of debt. And let's see, a little bit more leases. That's a lot of debt right there. $1 billion of debt. So let's see how much book value was destroyed in 6 months. Let's see. 7307. Oops. Doing the math backwards. 7307 divided by 7307. 18% book value destruction in 6 months. Very good. And then we have an accumulated deficit here. So the accumulated deficit actually went down. So did they have a profit? Did they have a profit, ladies and gentlemen? Let's see. For the 6 months they did. Yeah. So you can see their profit for the 6 months into June 30th, 2022 was $243 million. So you can see how it changes, right? So this is they had total accumulated losses of $1 billion since the history of their company. But if you do 102, it should add up. And if it doesn't, then I am trash. Oh, it's off. Interesting. They must have done some other debits or credits to the retained earnings balance. But generally, the net loss at the end of the year, you close out your earnings into your accumulated deficit. So I knew that they had a profit because I saw the accumulated deficit went down. If it goes up, that means they had a loss. So that kind of makes sense. Okay, let's see. Income from loss. Ooh, did they have like a one-time charge? What happened here? Okay, revenue's down year over year. Cost of revenue went up pretty significantly. What's their gross margin now? 540 divided by 1.760. 45% versus probably, ooh, that's a pretty big decline in gross profit. Yeah, I think I did that math wrong. Sorry, my head hurts. But no, their gross profit has definitely decreased massively. And then their selling general administrative expenses are massively up. Their research and development. Sales and marketing up a little bit. General and admin. So basically, it seems like, well, number one, they've had a little bit of revenue decline and all their expenses have increased. So that's not good. And that's why they had this massive freaking loss here. I mean, holy freaking crap. I don't know if they say anything about a one-time charge. Look at the cash flow from operations. Oh my God. Look at this. Stock-based compensation. Ooh, boy. Stock-based compensation expense was $282 million over 3 months, which is why they have a net loss. Oh my God. $459 million of stock-based compensation over the 6 months. Okay. Once again, another stupid little tech company that has positive cash flow because they have a bunch of stock options. That's how they pay their employees. Oh, we're not going to pay you in cash. We're going to pay you in, we're going to give you some clownish freaking stock. And yeah, then we can say we have positive cash flow. All right. What do they do? So at least they had a little bit of positive cash flow. Good for them. See if they had any major investment. They bought some PP&E. They bought some marketable security. Okay, well, their net marketable securities went down. Investments in Finance Justice Fund. What is the Finance Justice Fund?
Finance Justice Fund.
A freaking liberal. What is this? Is a socially responsible that aims to bring more than $1 billion from corporate to individuals and communities most underserved by mainstream finance. The goal is to help close the racial wealth gap and accelerate the work. Okay, so it's some freaking liberal thing. Nice. Well, they're investing in it. I wonder. That's interesting. It's not a donation. It's an investment. Okay, so... And they got they got $49 million from stock options. So apparently, probably because the stock went up pretty massively because of Elon Clown Elon, they probably had a bunch of stocks exercised. I would love to compare. Let's see. Yeah, I mean, it went up pretty significantly. Okay, so basically they're operating cash flow positive. That's good. They generated a lot of cash from investing activities from selling marketable securities, and they got some cash from stock options. But they have a decline in revenue year over year and a massive increase in costs. And a big part of their cost structure is stock-based compensation. What a freaking clown stock. Ugh. All right, let's do more comments. Twitter, my Esser. How many working class people do you... I don't work at the IRS. I work for public accounting. Strong man, love the show. If there's any way I can help with the channel, thumbnails, video editing, timestamps, clips. I mean, if you want to make some thumbnails, you go right ahead. You just email them to me. If you're good, I might even consider paying you. Maybe. We'll see. Yeah, I mean, honestly, I could use thumbnails. You can just make them up of like Jeremy or Kevin or something. I don't know. Thank you, though. All right, let's do Enphase. Enphase. Close this out.
Enphase. Enphase. It's the future, bro.
Enphase earnings. So I can at least conclude that Twitter is garbage. Thank you. Let's see. Second quarter. this the financials or just the conference call? Enphase Energy reports financial results. I'm sharing my screen. Close this crap out. Global energy company and the world's leading supplier of microinverter-based solar and battery systems. Reported quarterly revenue of $530 million, along with 42% non-GAAP gross margin. They shipped some inverters. Let's see. GAAP gross margin of 41%. Positive operating income. Positive net income. They're profitable. That's good. And I wonder how the new bill they just passed in Congress is going to affect this. Diluted earnings per share, 0.54. And I'll give it to them. At least they're profitable. Let's see. Q2 2021, Q1 2022. They got some pretty impressive revenue growth, and their gross margin has stayed stable. Their operating expenses have gone up. Wonder if it's in proportion. Yeah, you'd have to like download this stuff and like compare the margins. But I mean, they do have solid revenue and they are profitable. Let's see what their profit margin is. Does that mean you go buy it? No. What happens with these stocks is like, you know, they miss like their growth projections, they get wrecked. So they have a 14.5% bottom line profit margin. And then the prior quarter, they had 11%. So their profit margin, so everything's good. It looks like revenue's up, profit margin's up, EPS is up, diluted EPS is up. I mean, on the surface, it seems like it's amazing. And now it's just a question of whether you buy it at a good price. It's beastin'. Where are the financial statements? Okay, here we go. Okay. Try to see if there's anything like crazy on here. I mean, you'd have to do like horizontal analysis here to like compare the margins and vertical analysis. But yeah, it looks like it's grown like a freaking beast. I mean, isn't this a Meet Kevin stock? Let's look at the balance sheet. Cash went up, marketable securities went down, accounts receivables went down. That's fine. They collected some. Inventory went up. Let's see. I like normal balance sheets, unlike Oatly. Goodwill went up. They bought something. Deferred tax assets went up. Let's see. Any crazy debt increases? Current liabilities up, but nothing crazy. Let's see. Deferred revenues. Debt not. Okay, so they packed on a little bit of debt, but it's nothing crazy. So let's see how much book value this company increased in a matter of 6 months. 5%? 5% increase in book value in a matter of 6 months. Not bad. I can't really crap on this company too much. Let's see. Cash flows, add backs, depreciation. Woo! Look at that stock-based compensation. What percentage is that of revenues? 53,064. Divided by 530. 10% of revenue is stock-based compensation. You take that as you will. Okay. Deferred income taxes, that's an add back. Look at that. Yeah, they got pretty beast cash flows from operations. Let's see. Yeah, like a tiny business acquisition here. Yeah, I mean, I don't know. I can't really say anything horrible about this company, at least on a accounting perspective. You have to dig into it a little bit more, obviously, but I really got nothing bad to say. I don't know, guys. Let's see. We can look at, let's look at some other metrics, because like that's like the accounting perspective. We'll look at it from a
Finance perspective. Price to sales.
Forward PE 86. Market cap $40 billion. So their price to sales is 40.79 divided by 1.74. 23. Woo! Let's see. Priced, well, their current PE, well, here it is, 212. Oh, God. Yeah. So you see, like, if you look at something from an accounting perspective, it's a lot different than looking at it from an investing perspective. With accounting, you can just understand what you're freaking looking at. But, I mean, like a PE of 212, price to sales of 23, price to books of 90. Ooh, this is an expensive stock. But there's probably a reason, because everything is just growing and growing and growing. Everything's growing. Revenue's blowing it out of the water. Share dilution isn't horrible. Net income growth is freaking beasting. Free cash flow per share is beasting. Gross margin is getting better. Operating margin's getting better. Profit margin's getting better. Free cash flow margin's getting better. Can't really say anything horrible about it, but, you buy it if you guys want to. I'm sticking with VT for now. Let's see. Were you sick yesterday? Yeah, I've been extremely tired. Extremely tired. I actually haven't worked out at all. I actually might become fat man, like people say I am. I go to the gym almost every day, and people still call me fat man. That's how stupid the internet is. Oh, you're fat because instead of strong man, we're gonna call you weak man. That's so funny. Ferrari. All right, you've been asking me. I'll go look at Ferrari. Ferrari. Oh yeah. Ferrari. It's in euros. It's gonna be one of those stupid European financial statements. First half of 2022, first quarter of 2022. Let's see. Ferrari. Oh, yeah. Let's see. See what the auditors had to say. Dun, 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 dun. Issue. President. This semi-annual report is unaudited. Okay. Let's go jump to the financials. I don't have time for this crap. Income statement. Okay. Revenue for the 6 months ended June 30th. Up pretty significantly. It might be easier if we just do it on here. I don't like that European crap. It's just the same report. Yeah, it's updated. Nice. So this is in euros. So we can see, revenue seems to be nicely growing quarter after quarter after quarter. Let's see their gross margin. Oh, Tesla fanboys. Look at this. Look at that gross margin. Make sure I'm sharing my screen. Tesla has great gross margins, and it's because they're amazing. No, it's a luxury car company. Look at Ferrari's gross. There you go. I'll start using Ferrari when I compare it to Tesla. Operating profit is basically normal. Profit margin's basically normal. Free cash flow margin is down massively. Why? Let's go look at the balance sheet. We'll use this balance sheet. Let's see. What is this crap? Yeah, this is the European crap. Oh, God. Everything's like upside down. Cash went down. Current financial asset, I don't know. Treasuries went down, up. Let's see. Anything crazy changed? Receivables. Inventories. Deferred tax assets. Well, they didn't do any acquisitions. Those gross margins, though. Woo! Baby. So their total assets is increased. Their total equity, however, is basically flat. So, let's see. They do any like crazy debts. Other liabilities, they packed on some debt there. Packed on some debt there. Provisions. Yeah, this European stuff, I don't like it. All right, let's see. Operating cash flows have increased year over year. Investments in PP&E have decreased. So I guess their free cash flow margin is down. Why is that? Oh, it might be a quarterly thing. Yeah. Let's look at. Yeah, usually when free cash flow margin goes down, it's either because their operating cash flows went down or they did a lot of investments. And we can see if you compare the 6 months for the prior year, they did more investments in intangible assets, but less in property, plant, and equipment. What quarter was this? Yeah, that's probably the reason why. Dividends. Well, they pay a lot of dividends. Dividends paid to share repurchases. Okay. Well, yeah, nothing really to hate about this stock. I mean, it's pretty solid, or this company's financials at least. I mean, they generated some. Their book value remained flat, but their revenue went up, and they've basically maintained their profit margins. Let's go look at it from a ratio standpoint. PE 42. Holy crap! Price to sales 7. Price to book 16. I mean, really, it seems like kind of a high PE, but I mean, I can't really hate on the stock. I'm probably not going to buy it. It's gone up. It's gone up pretty significantly. Some good returns right there. Can't really complain. And of course, look at the market cap. So, okay, they generated 4.2 billion euro. Okay, yeah, they don't generate nearly as much as Tesla. Let's see. Still, it's hilarious to me that they, you compare this to Tesla. it's freaking nuts. But this is definitely, in my opinion, more reasonably valued than Tesla, just by the fact that Tesla is the most overvalued cloud stock I've ever seen. All right, Daddy's getting tired, everybody. Let's see. Fat Man, I love your channel, but mate calling yourself strong man is a piss take with a body like a smashed up caddy. I'm almost 33 years old, ladies and gentlemen. You see this? You call this a smashed up caddy body? This is after I've been sick. You can kiss my you-know-what. Yeah, I look like crap. That's right. Let's see. Ferrari is goated. Nothing to hate about it. The face of them looks like he's taking a delightful dump. All right, guys. I think that's about it. Daddy's getting tired again. But by tomorrow, I should be recovered. I might even do a workout tomorrow. You can't even lift that broom. I mean, I have a mop in here. Should I turn on? I'm going to turn on my weed whacker and just play it on the screen. All right, guys. That's it. You guys have a wonderful day. And talk to you later. Cheers.